to review presentation again, please note that this session will be recorded and distributed to all the registrants. Okay, there's one more person joining. So thank you all very much for joining us for accounting system requirements in government contracting session. We have expert here with us, and it's one of those subjects, that not always fun to dive into for those that are not in the accounting, but as a business owner, you definitely need to be aware. So just a couple announcements. I don't know if you know by now, but I've sent newsletters out just in case you missed it. Southeast PA PTAC is now Southeast PA Apex Accelerators. So our Procurement Technical Assistant Program is now under the management of the U.S. Department of Defense, DoD. Previously, it was under DLA, and has been rebranded to Apex Accelerator Program. This change is occurring across all of our 90-plus PTAC/Apex centers, including our own Southeast PA PTAC. What will not change for you as a client is the same great service supporting businesses like yours navigating a government contracting market. And what will not change is the increase, and what will change, is the increased scope and resources to support you even better than we have thus far. So you will start to notice us slowly changing our logos in email signatures, on our website, on all of our social media, such as LinkedIn and YouTube. So do not be alerted. We are not a different organization that has hijacked your company information and moved it somewhere else. We are still the same program. So just a little bit about in depth of who we are. We are federally funded by Department of Defense, Office of Small Business Affairs. We provide no-cost government contracting assistance. So please do keep that in mind as you may be approached by many different entities selling you services for a fee. But please check with us to see if this is anything worthwhile doing for you, as most of government procurement process is at no cost. It is free. Our services offer vendor registration, government marketing research and plan development, and proposal evaluations. We are one team, but are located in 4 different centers. That will be Kutztown University, Lehigh University, Widener, and we also have presence in Philadelphia at Philadelphia Navy Yard. Counties we serve is Berks, Bucks, Chester, Delaware, Lehigh, Montgomery, Northampton, and Philadelphia. And if you're not in one of those counties, PTAP services are regional. We will be happy to find you your own respective PTAC that you can reach out to for assistance. Our website is PTAC, southeastpa.org. We also have a LinkedIn page, and you can always visit our YouTube channel for any previous sessions that we have held, if you want to review any of them. We are really honored to be joined by Adam Weir from Defense Contract Audit Agency. He's an acting small business program manager. And Mr. Weir is the acting small business manager and is located in DCAA headquarters in Fort Belvoir, Virginia. In this capacity, he serves as the program manager and audit expert for the small business program, with the responsibility to provide assistance, consultation, and internal control with regard to audit requirements and their application to small business. Mr. Weir graduated from University of Texas at Arlington with a BBA in accounting and is certified in auditing and contracting. He has begun his federal government career by serving as a senior auditor for DCAA. He went on to serve as a cost price analyst and then a corporate and division administrative contracting officer for the Defense Contract Management Agency. Next, he served as the lead price cost analyst and small business specialist with the Army. Additionally, he went on to serve as a grants officer with the DLA, supporting the Procurement Technical Assistance Program, our program, and also served as a procuring contracting officer and administrative contracting officer with Washington Headquarters Services. He has thoroughly enjoyed his time supporting, communicating, and training and advocating for small businesses across all of his federal roles. He is currently resides in Fredericksburg, Virginia. So we are really lucky to have you, a great resource to us, and please take advantage of all the information and expertise that he's going to be sharing with you today. This is also your chance to ask questions. So Adam, thank you very much. I'm going to stop sharing and pass the presentation floor on to you.
Thank you, Natasha. Yes, thank you for the introduction very much. I'm happy to be here today. I want to say welcome back to those who actually attended yesterday. I know we had some technical glitches, but everything is smooth sailing today. But I want to say thank you very much to the Southeastern Pennsylvania Apex Accelerator now for inviting me. And I want to say all the Apex accelerators throughout the US are great resources to be able to utilize. So it's good that you're in communication with this Southeastern accelerator here, because I do want to say, when the government goes to contemplate issuing awards, or you're trying to break into the government space and see how you can obtain awards, the small business specialists that sit at the various different buying commands and things, they know of the Apex Accelerator as the resource to help find those businesses in the local areas where the government has its needs and offers its services. So, they are a great resource. So it's good to that you're in communication, right? So just wanted to say that before we begin. Also, I just want to, I'll share my screen, and I'm going to see if this works today. Let's see here. I'm going to jump off camera. You can see my screen, correct, everyone?
Yep, Adam, it's the introduction and DCAA overview.
I'll take that as a yes. So I'm just going to quickly highlight. There may be some others that here today that weren't here yesterday. And I'm going to show you one thing that I didn't show yesterday, but just highlight a little bit about DCAA, just our agency, how we're kind of set up and structured. I went over this yesterday, but just kind of for those who weren't here, basically, again, we were established in 1965 because every organization, like the Army, Navy, Air Force, had their own audit organization. And if you think about it, this can cause a lot of problems when industry is trying to do business with the government, because now you go to the Army and they have one set of standards and one set of audit standards, and it becomes frustrating, right? And then if you want to do business with the Navy, you have to do things, maybe they want stuff completely different way, or they see things differently. So it was causing a lot of confusion. So they did set up our agency to be the audit agency for all of the Department of Defense. And we also assist with a bunch of non-defense agencies, NASA, Department of Energy, Department of Homeland Security as well. But that's kind of the premise behind why DCA is set up. It's to provide that consistency. DCMA, Defense Contract Management Agency, is the same way. All the various buying commands were doing their own contract administration. This can get very confusing to industry as well. So it was kind of to streamline the process and stay consistent and more, push the same requirements or the same processes among industry without everybody having their own ways. But anyway, a little bit about DCA. We do all the quality audits and financial services, but the important part that we really talked about yesterday is the government has to achieve a fair and reasonable price for everything that it awards, all the contracts it awards to the contracting officer, and we support that mission on fair and reasonableness. As I mentioned yesterday, we're under Secretary, the Comptroller. We report a little bit differently than other agencies and the Army, Navy, Air Force and stuff to maintain our independence. We're all under the Secretary of Defense, but we have completely different reporting chains. And basically, as I mentioned yesterday, I'm going to show you something a little bit different today, but as I mentioned yesterday, if you want to find your local office, this kind of depicts how DCA is broke up. We have the three regions, Eastern, Central, and Western, and then field detachment. They do all our classified work and our classified audits. And then we have 4 what we call contract audit director. It's CADs basically to our major contractors out there. We're kind of so there's a big contingency of auditors that sit at those major contractor locations like Northrop and Boeing and Raytheon, et cetera. And I did say, as I did say yesterday, about 89% of our staff is audit. That's what we do. We're auditors and we audit contracts. So as opposed to some place like DCMA that may have quality assurance, they may have their engineers, they may have industrial specialists, a bunch of different functions. The buying commands have program management. They may have their own engineers and technical experts, different functional areas, but DCA is audit, right? 89%, we're just auditors. And here's just a quick map that shows the different regions broken up. So you can say, hey, if my business is in Texas, or if it's in Oklahoma or Kansas or Oregon or California, these are, it kind of gets you back to, hey, what is my Cognizant DCAA office? And this can help you that I showed you yesterday. If you go to our page, and I'm going to show this in a quick second, it'll show you, if you go under locator, it'll show you, okay, if you have your cage code, you're in SAM and stuff, you can actually try to find your Cognizant office, or you can search it by zip. As I mentioned yesterday, you'll have my contact information at the end of the slide deck. Feel free to reach out to me as well, because a lot of times, even if you utilize the search, it may give you like 3 or 4 different hits. And so you're not going to know which specific office. This has to do with DCAA restructuring over the years, et cetera. So always feel free to reach out if you need to find your Cognizant office because you're filling out some documentation, or you might need a DODAC code because if you're trying to build and wire your workflow, et cetera. So I can always help to assist to find the correct office. And then a little bit about our services. As I mentioned this yesterday, today, we're going to focus on, again, more pre-award side of the house. So the phases are pre-award, post-award, that gets into your contract performance, and then basically contract closeout when everything's wrapped up. We're going to talk about the accounting system audit and pre-award survey for the accounting system. We talked yesterday more about the proposal audit, kind of more all pre-award. And then, kind of what applies more to small business is more, maybe you would get an incurred cost audit if you have a a cost reimbursable type contract, and you're subject to allowable cost and payment clause. So that would be something. CAS, not so much, because small businesses aren't subject to CAS and disclosure statements and stuff of that nature. But it will be business system compliance as far as the accounting system goes. But this kind of gives a picture of what audit services we perform at what stages that a contract is in, right? Or if it's pre-award. And then we also help with like final vouchers and contract closeout to make sure all the final costs are correct, and that's what's agreed to, and then everything's closed. So here's a little bit that I mentioned, the presentations that we give, the DCAA gives, can talk to. We're going to talk about accounting system requirements today. And then these are a bunch of others. We talked about proposal adequacy yesterday. And then basically, here's the resources. And I mentioned this, I'm going to show you, because I think, let me see here. I'm going to show you this in a second. Here's our resources, manuals, audit programs, tool lists. And this kind of becomes a little bit important today because we're going to talk about checklists with the accounting system and pre-award survey. This is where you can find those documents. Here's the small business link on our page. And then here's my contact information. So I'm going to share that for 1 second. That's my email, and you can get it through this Apex Accelerator, and that's the phone number. Comment on my phone number. Our voice, you can't leave a message right now. So definitely feel free to email me if I'm not, on for some reason, giving a presentation, for instance, right? And I'll get back to you. And like I said, try to answer your question or try to provide you guidance on where to go to get answers to your question. So I'm happy to do that. So let me see real quick. I'm going to stop sharing for a second and see if, okay. I think this works pretty well. So here's just a live picture when you go to our website, dca.mil. I didn't show this yesterday, but basically, here's all the tools, right, that you can go try to find our FAO office, small business resources. As I mentioned, this is not really updated right now. as far as, the seminars that we might be giving, but frequently asked questions from small business that we get a lot. The presentations that I mentioned that we have, like we're giving today, the accounting system requirements, proposal adequacy that we gave yesterday, they're out here at this link, so you can kind of view those at your leisure. The other thing I want to mention, under the customer portal, here's where you can go to see the audit programs, right? So let's say, for instance, these are what our auditors follow. Now, sometimes they tailor their programs, but as auditors, we have to follow a program, right, to say, is our audits conducted in accordance with the generally accepted auditing standards? We have to follow certain steps to be able to render that opinion, right? And maintain our independence and stuff of that nature. So we have audit programs. Now, they can be tailored to specific needs, but you can always click on this and find the audit program that correlates with what audit you're going to be under, and review it to have an idea of, oh, what is DCAA going to be asking, or what are they going to be looking for, etc. So that's a really good resource. And then checklists and tools. So we're going to talk about this today, but you can find the pre-award accounting system checklist, right? That I'll show you today. You can find, if you deal with forward pricing rates, what's the adequacy checklist for those. If you have to put together an incurred cost submission, you can go to the ICE model that we have and say, okay, this is kind of what's expected to have an adequate incurred cost proposal put together, and stuff of that nature. So these are really good resources, and how to find them, etc. So let me stop sharing and okay, so now that I talked about let me see, that'll go off. Okay, that I talked about the kind of an overview, what we are, how we're structured, etc. I'll just do a quick pause before we get into the accounting system to see if there's anybody that's attending that would like to ask a question about how we're organized, or something that I went over that is a little bit confusing. Okay, maybe no questions. Okay, so I'll move on to the accounting system requirements. So you were a small business and you're wanting to or you're a startup, right? And you're thinking about what type of business you want to operate, who your customers are going to be, who am I going to do business with, etc. And maybe you find out about a government contract, as you want to go after those types of to supplies or services for our men and women in the military, etc. And that's how you're going to set up your company. So what requirements do you have to adhere to and kick in, etc. So basically, and I'm going to kind of start at the end of this slide. I'm going to go a little bit out of order here, but kind of provide an overview. So, what is an accounting system, and how do I get started, right, if I don't have one? So basically, if you're a small business or a startup, what are the needs of your company, right? And what are the needs if you're going to do business with the government? So generically, what is an accounting system, right? It provides, it provides readily understandable and auditable document in a trail, right? A trail to all your records and things that it produces. And from a government perspective, it's a system that meets the minimum requirements set forth in the contract or in the FAR, right? To which you must comply with. So, and basically, you can also have an accounting system to avoid costly accounting and billing areas, right? That would require you having to reimburse the government, right? Pay back something because you're not following the regulations correctly, right? It allows you to manage your business, understand it better, improve your ability to control your costs. You can become more competitive in the marketplace. It provides a basis for future cost proposals, right? To develop future cost proposals. It decreases your business risk, right? So basically, bookkeeping, nobody likes to talk about bookkeeping, right? But, you get into, okay, do I have a general ledger? Do I have mapping to map to everything? My chart of accounts, is it going to be in accordance with GAAP? Which FAR requires, like questions like accrual-based accounting, cash-based accounting, Okay, am I going to track my income, my revenue, my cost of goods sold, et cetera? Everything fun that an accounting system does, right? So I'm talking a little bit about the attributes of an accounting system, okay, kind of in general, and what the government expects, and then supporting document attributes. So, let me talk a little bit about this, and I'll get more back to the slides a little bit more. But basically, we get a lot of questions sometimes on, oh, does DCAA have an approved accounting software we can utilize, right? So let's say, maybe someone was really tiny and they were trying to track things on a, Excel spreadsheet or something of that nature. Or they're trying to just do a startup, and now it's like, okay, they got to worry about their costs and what they get into. So what type of, if you're going to go with a software, there's tons of commercial off-the-shelf softwares available that have different capabilities. You have to decide what's correct for your business. And as I go over the information today, okay, you can take into consideration, if you're going to do business with the government, or you would like to, what has to be adhered to with all the documents and things that your accounting systems produce. So you can take that in mind when you do select a software. If that's kind of the phase you're in, maybe you already have good software that you're utilizing. But basically, like I said, choosing one is complex. It's just depending on the complex ability to meet your business needs. And depending on the learning curve you have to do it, but you have to worry about price, functionality, what all your business is going to do. There's all kinds of software out there. QuickBooks, I think Wave, Patriot, NetSuite, Deltek, Costpoint, more expensive, Oracle, Quicken, right? There's tons of different solutions. But again, DCAA does not recommend a software over the other. We tell you what the needs are for accounting perspective, and then you as business owners of your company and working with your bookkeepers and stuff have to decide if this is good and can produce what is necessary to meet those requirements as a prospective contractor, right? Or if you're already in a space, right, that you're adhering to the accounting requirements that we have. But basically, some of the things that we look for on the different attributes, as I mentioned before, tracking costs to a certain accounting period, like your fiscal year, an audit trail, right? It leaves an audit trail to be able to trace all the documents. Other attributes like labor, okay? Do you have employee classifications for each labor, right? Engineer 1 versus engineer 2, time card, timekeeping system, which we'll talk about, payroll information, okay, payroll registers. Can you track uncompensated overtime? Do you have a labor distribution report? Okay, when you get into travel, okay, is your system able to track to per diem rates if that's what you're going to allow? Do you have written permissions? Let's say you're traveling, maybe something's over excess, right, of traditional per diem or what's allowed in the contract. Can it produce a document that's a justification excess signed off on by the right authorities? Do you have lodging receipts, meal receipts, airfare receipts, all of those things, material and purchase? Do you have a purchase order system? It can produce POs, stuff of that nature for all the materials, etc. Right? Do you have, can it track your invoices, your purchase orders, your bill of lading, and other direct costs? ODCs, invoices, purchase orders, stuff on that, refunds, discounts, right? When you get to equipment, do you have, can it track all the invoices and purchase orders in place for that on subcontractors? Can it track your agreements with your subcontractors, right? Your suppliers, all those invoices, et cetera. Do you have, if you're a bigger company, you have intercompany transfers, can it track that? Indirect costs, which is going to be a large topic today. When you set up your indirect rates, can it track those expenses that are charged in those pools directly to the correct contract by the correct pool it should be tracked? I'll get into that a little bit more, but the accounting system would have to be able to do that, right? And a big part of this, so we'll talk about in a minute, is segregating direct costs from indirect costs. Unallowables, that's a big thing. Can your accounting system, there's FAR Part 31, all types of unallowables. Can your accounting system track those unallowables so they don't get charged to a government contract, right, that they're not supposed to be charged to? Which, again, we'll talk about this a little bit. They may be legitimate business expenses, right, but they would be unallowable on the government, on a government contract because of their certain rules in place. And then like supporting document attributes, right? So the system is maybe software, but also policies and procedures. So accounting policies, okay, you're following GAAP. That describes your accounting methodology. Okay, is your computer system manual? Is that system manual, computerized? Do things interface? Again, airfare receipts, bills of lading, cost estimating processes. Do you have procedures for all these type things, incidentals and miscellaneous receipts? Do you have ethics policies, right? You have internal controls. Again, I mentioned labor distribution. That's very important. Labor policies, right? How your policy's written. Okay, what compromises a full-time equivalent person, right? Depending on, okay, right, they have a salary that's worth 2,088 hours a year, right? Okay, but they're going to take so much leave and vacation and other things. So how many hours are actually going to be used to work? Okay, maybe that's 1,850 hours or 1,900 after you subtract all the other. Can it do things like that, right? Payroll information, payroll registers. I mentioned some of this, rental car receipts, reasonable costs, okay, uncompensated overtime. So I mentioned a lot of these things, but I'm just going over the highlights of, hey, where do I get started if I haven't, or is my system capable of tracking all these things if I'm trying to get into those places, or now are the accounting system requirements kicking in? So let me kind of switch from that topic to why is this important to the government and what makes it important to the officials of the government. So if we go to FAR Part 9, okay, we get into contractor qualifications, okay, and this is where it's written to all the contracting officers. They're only allowed to solicit offers from and award to responsible contractors, okay? So part of that responsibility, and they have to make a determination of the responsiveness, but part of that responsibility, again, is making sure companies adhere to all the rules and regulations. And under DFARS 242, it talks about when to insert the accounting system clause, but it basically says when an audit might be applicable or you need an adequate accounting system is when you get a cost reimbursement type contract, or you're contemplating one, right? A prospective offer, an incentive type time and material labor hours. We call those flexibly priced contracts. Or you're going to get a contract that's fixed price, but it's going to have progress payments that are made on the basis of cost incurred by the contractor. So that's kind of what makes these things apply. So you really want to pay attention to what you're signing up for, or recognize, hey, are these clauses in my contract, or what type do I have, and ask those questions, because it should be very clear in the solicitation what clauses are going to apply, right, and what you're signing up for, what you need to do to get that award. So basically, when a contracting officer tries to determine on a prospective offer, when do they need to have accounting system review, right? Or you've heard financial capability. Can that offer, financially be able to perform on that contract and, see it through to the end, et cetera? DCMA, Defense Contract Management Agency, handles the financial capability reviews. They're going to look more at like, your working capital, financial statements, stuff of that nature, to say, hey, are you capable of handling this government contract? And really that gets on the value of the potential award of that nature, right? That's what they do. So we really don't get involved much on the financial capability side. But also then, and we're going to get into the checklist in a minute, on the accounting system. So if you meet one of those requirements, if the contract meets one of those, or has one of those terms in it, like, okay, it's this type of contract, or you're going to get progress payments, a contracting officer has to make sure that your accounting system is deemed adequate, or that it will be capable. And I'll get onto that in a second. But basically, you need to have adequate financial resources. They need to be at FAR Part 9, have to be able to comply with the required or proposed delivery or performance schedule, have a satisfactory record of performance, record of integrity and business ethics. These are all things that the contracting officer looks for to make that responsibility determination I mentioned, okay? So basically, as we get into the slides, so prior to contract award, the contracting officer, like I said, will conduct the pre-award survey. Okay, so a pre-award survey, we have a certain format. You know, that's if you don't have an approved counting system or whatnot, we have a checklist. We actually have a couple of checklists, and we'll go over kind of what DCAA is looking for on the checklist. Okay, so basically the pre-award accounting system. The pre-award accounting system audit, you know, we're going to look at determine if it's acceptable, because you'll see a minute in the checklist. That's what the reviewers have to say. Hey, did we find it? Did we find it acceptable? Did we find all these items there for that prospective contract? They have to fill out that checklist. They have to sign it and put any comments in there to the contracting officer, because they're going to make that determination. Okay, so let's see. And here, so I'm going to show a couple of things. Let's see. Let me share. Let's see if I have this open here. This application is great. Okay, hopefully you can see now. So basically, here's a copy of the what will happen a lot of times is before you actually see the checklist that DCAA goes over, a contracting officer may send a business, you know, someone that's new to the space, if you will, a pre-award you know, survey of a prospective contractor. Okay, so let me make sure. Okay, so this is not easy with too many things popping up on Zoom. Okay, so let me before I get into the other document, this is the pre-award survey of a prospective contract accounting system checklist. So you may receive one of those if you're about to go through a pre-award survey of your accounting system. And this is for you as a contractor, prospective contractor, to fill out, because they want some initial information. It'll probably be sent by DCAA. It could be sent by the contracting officer, but they want some information from you to kind of start the process. Okay, so you would fill out this checklist, just your name and case code, stuff like that, identifier. But as you go through this checklist, has your organization ever been audited? Right, it kind of by DCAA, it kind of wants to know that information. Did DCAA say it was acceptable at that time? Okay, so these are some of the questions. Is your organization subject to CAS? Like I said, most small businesses would not be. Do you have a CAS disclosure statement? So is any aspect of this proposal inconsistent with your disclosure? Okay, so that's more about CAS, which probably doesn't apply as much. Has your organization been audited by an outside public accountant, right? Your financials, the CPA. You know, is your accounting system currently fully in operation? And we'll talk about that in a brief second. You know, is your accounting system in accordance with GAAP? You know, these are all the questions that they would ask you. Are you ready for the DCAA audit? Okay, it talks a little bit more about the rates and estimating accounting policies and procedures, proper segregation of direct and indirect costs. So these are actually some of the questions that you're asked ahead of time that you'll actually see on the audit. But you can go, you know, review this more if you're getting into this space to see if your accounting system, software, policy, procedure are capable of doing a lot of this stuff. Okay, so let me go back to this is actually what DCAA will fill out, okay, once the audit begins, right, to see if you have an accounting system. So this is the document, okay, it's SF 1408, I believe, yes, there at the bottom right-hand corner. Here's the evaluation checklist, okay, and this is what DCAA will go through. So basically, and we'll talk about this throughout this presentation, but the accounting system doesn't provide for all these things, okay? So a proper segregation of direct from direct to indirect costs. The other thing I want to point out here is on this spreadsheet, okay, on this checklist, how does this tie back to the regulation? So every one of these are tied back to if you look at the DFARS clause, which is 252, 242, 7006, okay, Every one of these is spelled out in that defense supplement regulation to the FAR. So for instance, if it talks about segregating of direct costs from indirect costs, that's letter C2 in that clause. Okay, so each one of these, the next one would be C3, is tracking to the regulation. And that's what has to be determined for you to have an adequate accounting system. So, segregation, we'll talk about directs and indirects throughout, identification of accumulation. That's why I was saying the software can identify, can you charge to a contract correctly, right? Accumulation of direct costs versus indirect costs. Okay, accumulation of your general ledger. We'll talk about timekeeping system a little bit more. We always get questions about timekeeping systems in labor, and where DCAA can do their floor check and actually go interview employees and stuff of that nature. A labor distribution, right? That you charge to the appropriate final cost objectives, which would basically be a contract, right? All these others, exclusion from cost charged to government contracts, which are not allowable. So that's the unallowables that I mentioned before. And then, you have here, again, the reason why that I already went over. Also, I did want to point out on this, there's two important things here under number 3. And this is why, again, an adequate accounting system is important when you get government contracts. There's 2 clauses that you have to pay attention to a lot, which is called limitation of cost clause and limitations of funds clause. So on the limitations of cost clause side, it's usually when you get a cost reimbursable type contract, as you know, or you may not know, the government gets appropriated funds from Congress, right, to utilize to go buy these services and supplies. But the funds that are obviously people have to watch those funds, but you can only have so many funds to go around. So sometimes, when they go to fund especially a cost type contract, it's an estimated cost, right? Because cost type contracts are going to pay for all allowable, allocable, and reimbursable costs. But there always has to be a ceiling on that. So you don't know exactly what it's going to end up costing at the end, because the government is supposed to pay all those costs, again, that are allowable. But there's limits on that. So if you get to the ceiling, let's say the contract is $10 million, and you're starting to get close to that ceiling, you have to notify the government if you incur, like, I believe it's 6, it can be different percentages. You have to pay attention to your contract, but let's say, like 75% that you've incurred, that you're close to that ceiling amount, you have to notify, because if you go over the ceiling, you could actually have to end up, not getting those costs reimbursed, right? So it's very important that you have a system that can break down certain clauses that are applicable to you. Same thing on the limitations of funds. So the limitation of funds simply means you're going to get incremental funding on your contract. So the government only has a certain amount of money by whoever they're making the purchases for, and so they don't know when the money is going to get there. So you have to pay attention to that to say, okay, we only have so many funds, so are we going to be able to finish this contract, etc. You have to track that on the incrementally fund and pay attention to those clauses. But my point is about the accounting system, it needs to know the clauses it has so it can track stuff like this, produce documents, notify the government officials of, hey, this is where we are, maybe generate, like I said, monthly reports and stuff of that nature, stuff. So that's important. And then this is the end. So I do want to make a comment here about the end of this, number 5 at the bottom. Is the accounting system currently in full operation? Okay, so in operation, set up but not yet in operation, anticipated or non-existent. So when DCAA goes out and looks at, okay, well, maybe this is a startup business, they don't have an accounting system yet. Maybe they haven't purchased software, because think about it. What if you're a prospective offer, right? And you want to get into government contracting, but you haven't yet. So you haven't got the award yet. So now all of a sudden you start paying costs to get your company, set up to be able to comply with all the government regulations. Maybe you get more software, you get software for the first time, and now you don't win the award. Well, guess what? Maybe you did all that and incurred those costs for nothing. So we recognize that. So basically, when we come out, we also can say, okay, do you know this material? Do you know how you're going to set up your system? Do you know what, if it's software, what type of software you're going to buy? I mean, not that the type is important, but that you can find that it can produce everything the government needs to produce, like segregate direct from indirect costs. Okay, where's your listing or your procedures and stuff of this on how you're going to set up your system. That has to be well defined and something that DCAA can read, because they will have meetings with you. The teams will have meetings with you to set up, say, hey, they'll ask questions, what policies and procedures you have. Can you do everything I just went over in this checklist? Is your accounting system or your future accounting system, right? Is it going to be capable of doing this? How are you going to set it up? How are you going to handle this? How chart of accounts, et cetera. We'll talk a little bit about that with unallowables. But so, I just wanted to share that at the end, because, some people may say, oh, we got to go purchase all this stuff, and we don't even know that we're going to get the award. And that's not true. But you do have to have something well-defined that's auditable, that can explain how your system, once it's set up, can accomplish all these things. Okay, so let me go back to.
Adam, we have a question in the chat that I just want to bring up now before we go any further. Deborah has wondered, would you recommend that a small business speak with your office before submitting bids?
Before submitting bids, I don't know the context of the question. Really, it's going to be up to, so a point along that line, DCAA, and I think we'll talk about this in one point in the slide deck here. But basically, we don't take any requests from from industry or business directly to us, as far as, hey, can you come out and conduct this audit, or can you do this, or can you do this review? And we don't provide recommendations, because remember, I mentioned the important regulation GAGS, generally accepted auditing government standards, right? We have to be independent. So, like, for instance, if DCAA told you, hey, use this specific software, or do this, like, exactly, then if we come and audit you, we're basically auditing ourselves, right? And we can't get into that. So when you say, hey, should you contact DCAA before you do any bids, DCAA is not going to know, hey, what you're bidding on, or what the rules are of your contract, right? So what I would suggest is, if you have concerns, or you think you're going to get, the type of contract that, or you look at the solicitation that says, hey, are these requirements going to kick in because of the certain type of contract this may be, or because, you're going to have progress payments or something of that nature, I recommend you talk to the contracting officer or specialist that's a point of contact in the SAM, right, that posted the award, to say, you can ask them a question to say, hey, is this requirement going to be in that award, right? And hopefully they would be able to convey that to you, to say, yes or no, or yes, we may have to get a survey. But just because you're going to go bid on some things, you talk to DCAA, we're not going to know, what it is exactly, what the requirements are, because we're not in the contracting office shops and the buying command. So basically how that works is, contracting officers are the only ones that can make awards, right? And they're the ones that post the awards, at sam.gov that you're trying to bid on, right? But they're not the ones that have the requirements, okay? These are the program offices, and other people have the needs. Contracting officers are supposed to adhere to the regulations. So they have to communicate with the other folks, but they have to make sure what clauses, and these are, provisions are put in the solicitation, what are going to apply to this particular acquisition, right? DCAA is not going to know any of that stuff, right? We don't know until we get contracted by a contracting officer at a particular stage to say, hey, this is what we have, because we'll ask them questions as well. Hey, give us copies of this, or if you want us to review a proposal, give us copies of the solicitation, right? Or at what stage, is this going to need an accounting system review or pre-award survey review? The contracting officer is going to communicate that to us, but we're not going to know, right, if you're just doing that. So yeah, no, I'm not sure it's good to contact DCAA, because, like I said, we're just not going to know. All our workload is basically derived from the contracting officers and those people that tell us, hey, we need this to happen. They'll send us a form and a request. So hopefully that answers your question. But I think you said you had another question.
No, that was my
there
only question. Thank you.
Oh, okay. I thought somebody else said there were two questions out there. Okay. Okay, so next slide, the acceptable accounting system. Okay, so we went through the pre-award survey and talked about that in depth and the checklist, right? So now we're going to get into more the criteria of an acceptable accounting system, right? So what is it? Okay, out of all the stuff I mentioned, what's the criteria? And this is defined at what I mentioned before, the DFARS, which that checklist that we went over. Everything is spelled out in this clause right here. Okay, so but it wants to provide, a system which a system is a combination of software and policies and procedures, right? Proper management, et cetera, like that. That's what it means by system. But reasonable assurance that, again, as I've been saying, all the applicable laws and regulations, you're complying with that, right? When you sign up for a government contract, you have to know what's in it. Not only do you have to know what your deliverables are going to be, and the type of work, what is the want and the need, but all the other things that go along with that, right? All the other clauses and regulations that you may be subject to, depending on type of contract, et cetera, right? But also a system where the accounting system and cost data are reliable. So this is one thing that, let me kind of underscore the number 2 there, that DCAA, I will say, only looks at. So you may have different types of reviewers, and I know it can get confusing on what government person is this and what do they do, DCMA versus DCAA, what are all these acronyms in the government, who's looking at what. It can definitely be a little bit confusing and maybe a little bit overwhelming at times, or maybe you feel like you're being reviewed by, different people for the same type of thing. But DCAA is basically the only office that looks at your accounting system, and that what documents come out of that accounting system that they can actually be relied on. Okay, so your accounting system produces a document, and DCAA can look at that and say, okay, yeah, we can rely on these. Your system does produce accurate and reliable documents. Other folks or other pricers at other agencies, they're really not looking at the reliability of that stuff. They're just looking at the document itself to say, hey, is it what we need? Can we utilize it? Is it enough information to determine a fair and reasonable price or something of that nature? So that's why DCAA is very important, because we get into the actual audit to say, hey, does the contractor we're doing business with, are the systems reliable, the documentation being produced out of them, and then also the risk of misallocations, mischarging, they're minimized by a good quality accounting system. Contract allocations and charges are consistent with your billing procedures. We'll get into that just a little bit more, and again, the same DFARS clause defines an accounting system is, system or systems for accounting methods, procedures. So basically, like I said, it's policies, procedures. It can be perceived as software as well, to classify, analyze, summarize, interpret, and present accurate, timely financial data. Now, a long time ago, DCAA used to have a bunch of systems, okay? That it would kind of keep track of and go out every so often and look at, et cetera, et cetera. But, and they would be kind of subsystems, if you will, right? So you may have like billing, the labor, timekeeping, which we're going to talk about, kind of like subsystems. Labor distribution could kind of be considered its own system. That all, a number of years ago, kind of all of that went away. And there's 6 major business systems. Okay, so there's the estimating system. We talked a little bit about that yesterday. There's what's called the MMAS, Material Management and Accounting System. There's the accounting system that we're talking today. Those are 3 business systems, and DCAA does the reviews of all those systems. And you have to read your contract or the solicitation to know, if you're going to be impacted by being able to have these various systems, or the capability that your accounting system can, provide interoperability with these other systems that are necessary to be reviewed as well, right? And so, estimating system would produce proposals, right? Future proposals. The MMAS system I mentioned would handle all the material and the accounting for those materials, et cetera. Accounting system, again, we're talking about today. The 3 other systems, that you may run into at some point, I don't know, if you scale your business, more large, et cetera, would be purchasing system. That's controlled by DCMA. They do what's called CPSR reviews, contractor purchasing system reviews, but you have to look at your contract to see if you're going to have, be acquired or required to have a adequate purchasing system. You would have also a property system, right? If you're going to deal with government property, government furnished property on your contract, how you maintain and handle that property, right? And then, in some cases, but we're talking over $100 million in certain requirements, you get into what's called EVMS system, which is earned value system. So it's important, again, as you scale or you want to do further business, that you have an accounting system that has good interoperability with all these other systems, right? Now, the people that make, DCAA is not an organization that makes determinations of adequacy on any of these systems, okay? We do the reviews, the audits, and we provide our results and our recommendations to a contracting officer. And a lot of times for business systems, that may be someone at DCMA, if they've been delegated duties of contract administration, and they may make the final decisions on all these systems and whether they're adequate or not. But DCAA, does the audits on, like I said, 3 of them, and provides their results to the deciding official, if you will. Okay, and what can happen is if your system is deemed inadequate, if you're a prospective contractor, you may not be eligible for the award. If you're a current contractor and it's inadequate, you may have penalties that are applied, or if you don't correct the deficiencies that were found in your system, then you're subject to withholds of payment, and you're subject to not getting future rewards, etc. So all these things are important when you get into the government space. And especially how large you get, etc. So basically, and I do want to mention, let's see, along that line, about one aspect of the system that it has to be capable of doing, okay? And I've mentioned this a couple of times, is labor distribution. Okay, we're going to talk here in a minute about direct and indirect costs and what they are and what you have to do. But if you think about it from the perspective of, okay, you need to have a labor distribution, right? Because now if you're getting government awards and government contracts, to follow all these rules, okay, that it's going to distribute the proper charges to that contract directly and not allow what's not supposed to be there. But you also going to have direct, indirect costs, where it distributes direct costs, right? As direct costs on that contract. But if a labor distribution system that can distribute indirect costs, and we'll talk about what that is to like a final indirect cost pool, right? So that's why a labor distribution system is very important. We're going to talk about that just a little bit more. So next slide, total contract costs. Okay, so what are the total contract costs? We're starting to talk about direct versus indirect costs, and a system that's capable of segregating those costs. So basically the total contract cost is the sum of all the direct and indirect costs that are allocable, and we'll talk about that word allocable a little bit more, that are allocable to the contract. Okay, so while the total cost of a contract includes costs properly allocable to the contract, the allowable costs, okay, are limited to those by FAR Part 31. So people can get a little bit confused on, what does this mean? What does it mean when someone says something's allowable? What does it mean when somebody says something's allocable? Are they same, different, et cetera, et cetera? So, here's a quick example. So say you have an employee that's traveling for the purpose of contract A, right? There's specifications in the contract that says this employee needs to travel from point A to point B to fulfill this requirement on the contract, right? And say you pay $50 for, economy class, but at the gate, okay, the flight attendants announces, oh, they have an open first class seat. Everybody's really happy in first class. It's going to be more relaxed. So let's say that employee decides to upgrade, and pay another $50 for a first class seat, okay, because they just really want to fly and that looks great. So the $50 for the extra $50 for first class has been incurred by that employee. Now the question becomes is, what can they charge? What can get charged to that contract? So if you think about it in these terms, the full $100 was incurred for the purpose of that contract, right? So the full $100 is allocable, right? Because he or she did not have to travel, if not because that contract didn't require it, right? So all those costs are attributable to that contract or allocable to that contract. But per the government rules, can you charge that contract, okay, the $100? The answer is no, right? Because the travel rules state that you have to follow, you have to do economy class in most circumstances. And I mean, there can be some rare caveats. I mean, there's court cases out there on some of this stuff, but I would say preponderance of the time, for sure, it has to be economy class, and that's what the government will reimburse. So therefore, costs can be allocable, but unallowable, okay? Whereby costs cannot be unallowable and allocable. Okay, so you have to look at it a different way. Allocable, it has to be allocable to even be allowable, but it can still be allocable and be unallowable. So hopefully that always kind of confuses some people, but anyway, nevertheless. So let's see, direct costs. Let's see, I think we're going to talk, I want to say, okay, so we're about to talk. Okay, so total contract costs. Again, we talked about what those were, but we're getting into one of the things on the checklist or your accounting system, segregation of direct costs and indirect costs, and more what they are. This talks a little bit more. Direct cost is any cost that is identified specifically with a particular final cost objective, which basically means a contract is a final cost objective, right? Indirect costs, it's not directly identified with a single cost objective. So a lot of this confuses, this just talked a little bit about FAR 31. This kind of confuses. So I'm going to try to shed just a little bit of light on this based on a question that we received yesterday. I don't know if the person is still here with us today or not, but we got the question yesterday about your CMMC costs, right? That's kind of a new requirement. So, getting into a lot of cybersecurity costs and stuff of that nature. And the question was, is my CMMC cost direct or indirect? And like I said, we don't, DCAA is not going to tell you, you have to, you set, this is the right way to do it. You have to set your cost up as direct or indirect. We can tell you what's normally in the definitions, and, you need to kind of follow that. But, I can tell you more of what's commonplace or some questions to ask. So if you think about it in this regard, direct costs are those that are incurred directly for a specific contract or a project or contract and can be easily traced. I used that word yesterday, traceability, or assigned to that work effort. So an example, like if you're buying custom materials for a specific project, it's going to be direct, right? It's for that project. So you can think about direct expenses in the terms of for those items or services that are deliverable on a contract, performing work specifically for the services and the deliverables that are spelled out in that contract. Those are more direct costs. They're easily attributable to, maybe a specific CLIN or contract line item number in that contract. Okay, and it's just benefiting that one specific contract. In contrast to that, okay, an indirect cost are those that benefit two or more projects or contracts that you have going on. So they're not easily identified, and equitable costs can't be assigned, to that to those projects in an equitable, in a directly equitable manner. And I used the analogy yesterday of you had maybe a higher level executive in a company that's overseeing the company. I mean, theoretically, you could almost take all costs and charge them direct, right? But it's impractical for some senior person to say, okay, I spent, a quarter or a tenth of an hour talking maybe a little bit about this specific thing today, and I spent a quarter of an hour. It gets completely impractical because you're kind of overseeing that whole operation, if you will, and you need to spread all of that cost to all the applicable things that are benefiting from that, which is typically contracts or projects that are ongoing, et cetera, et cetera. So where there's two or more and things aren't specifically identified, right? And so then we get into the question of, okay, CMC cost, I think, that I mentioned before. So bear with me for 1 second. I had something I think I was going to share, if I can find it. It's all about organization, right? Okay, well, maybe it'll pop up in a second. I think I had something I wanted to show and share, but I don't think I can find it in front of me. But anyway, basically, so a couple of examples that I'll use that are a little bit more complex on direct and indirect, and hopefully it'll make a little bit more sense. But let's say, for instance, you had something like you know, a bucket of costs for, like, you know, firemen, right? Fire expenses, you know, that, okay, that was a part of a lot of your business where it required, you know, firefighters, et cetera, or people. And so generically, if it affects all your contracts, maybe those are set up as indirect costs. But let's say, for instance, you have a specific contract that spells out in the contract, you need 3 firefighters for this specific contract to be available all you know, at all times and all that. Well, that gets into that indirect versus direct in different circumstances. That's considered a different circumstance, because your contract, as a deliverable of that contract, is specifying exactly what you need. Those would be direct costs of that contract. You just can't intermingle the two, even though you may have this other bucket, because you have a lot of businesses that utilize those firefighting services, if you will. This also becomes a point of contention at with larger businesses that get into research and development costs, or independent, they call it IRAD, independent research and development, right? Typically, that's always an indirect expense because it's kind of the lifeblood of many companies, right? Cutting edge technology, so it's like it's all contracts, all businesses benefiting from that research and development that a company does. But occasionally there may be a contract or some sort of proposal that specifies we need this specific type and this, and it has to spell out, and there's certain rules that it can actually be charged in that instance, right? So there are a couple of caveats, right? But this gets back to the CMC cost. So when you're looking at it, if you set it up a certain way, here's some of the questions, you know, you may get from DCAA. What's your reasoning or proof that these are a direct cost, right? Is your CMC cost clearly defined as a deliverable of that contract? Otherwise, or is your whole company benefiting from it, right? So, okay, you got better cybersecurity control, et cetera, of your entire company. So now it's like, hey, it's benefiting your whole company as a whole, right? You can go after other contracts, or if you have other customers, they're able to you know, get benefits from that as well, because you're a more secure company overall, et cetera. You can advertise that way, stuff of that nature. So, you know, if you think about it in that regard, and also CMC costs, you got to think about it along with IT costs, right? So IT costs generally are indirect costs, right? Because they're, you know, your whole company, right? You're just from email to all the things, you know, that a company does. If they have like an IT department, I realize a small business, or especially a start, is not going to have all these different departments, but, you know, you're still kind of overseeing the whole thing, if you will, and how you set a company up. So, you know, everybody's going to incur some IT costs, IT expenses, whether you have a department or not, and you have to decide, hey, most of those probably is going to benefit all of my business, all of my company, therefore it's indirect costs. Everybody needs to share in a fair portion of those costs. CMC costs, you know, okay, how you have to explain, how are these costs different from my IT costs, right? So especially, again, if a contract's not specifying, hey, you know, you have to, you know, give us a compliance cert as a deliverable on this contract. So that's kind of how you can think about it, you know, how you can think about, okay, how to set up a direct from an indirect cost, et cetera. So we'll talk about a couple more examples of this, but basically, let me see where we are. Okay. Again, on DFARS requires a certificate of direct costs by contract. So direct costs are not limited to items that are incorporated in the end product, such as material or labor. Okay, so there, like I said, I think I mentioned this earlier, there's a third category, okay, and that category is ODCs. Okay, so you know, usually you have direct material, direct labor, and then there's other direct costs. So we're going to talk about each bucket of costs as we go through these slides. But no final cost objective shall be allocated to it. We already talked about what allocation means. As a direct cost, any cost that has been included in the indirect expense pool. So basically what this gets into some of the CAS regulations, but it's also reinforced by FAR Part 31. Basically all this is trying to say, and all this jumbled language is, you can't duplicate the cost. Basically, you can't charge the government twice. So in other words, and that's why you have to be consistent with the way you set up your accounting system and how you're going to assign cost, direct or indirect, because it's like, okay, one contract receiving the cost direct, another contract may be receiving it indirect. And so basically then, you have the potential to double bill, right? So think about it. Okay, one cost is receiving this cost as direct. Now you also have it set up as indirect. We're getting that cost twice, right? So these are things that the government's trying to prevent, because it does require, costs that can be identified to be set up directly as direct costs, to put in these pools, which we'll talk about in a minute, to have these logical cost groupings, et cetera. So, but you have to understand your business, and that's what I'm saying. That's one thing that DCAA is going to really look for on, in the surveys and on any potential accounting system audits, is that you know the difference between direct, indirect, and you can set up your system to segregate those costs, and everything's clearly defined, right? And it doesn't mean, I won't get into this today, but it doesn't mean you can't make changes, right? Even midstream on a contract, but there's implications for that, and things have to be disclosed. There's a certain protocol that has to follow. The government doesn't want folks switching every year, right? Okay, there were benefits here, benefits there. It needs to be consistent, and you can't go in and out every year, or there's going to be problems, potential violations, stuff of that nature. So, okay, so let's see, direct costs. Did I talk about? Let's see. On the direct cost side, so I mentioned a lot of times direct costs would be like labor, okay, direct labor, direct materials. ODCs would be a lot of times considered travel, still a direct cost, right? If the travel is required for that particular contract. Subcontracts, okay, so you need suppliers, vendors, subs. That's also typically always listed as the other direct costs of that contract, right? Because you need those materials or those supplies, those subcontract services to fulfill the requirements of that particular contract. So a quick example on this, I kind of talked to this already, but basically, let's say a contractor has a computer support center that supports two different facilities, okay? So you have facility X and facility Y. And I kind of talked to this already, but when employees of the computer support center perform work for facility X, they charge their time direct, okay, to the contract. But when the employees perform work for facility Y, they charge their time to an indirect cost pool. They charge basically charging their time indirect. So now they're treating the same cost two different ways. And this is a non-compliance practice with FAR 31. It's also non-compliant with CAS if CAS is applicable. But the overall purpose of those costs of basically your computer support center, it's like the circumstance hasn't changed, right? So like circumstances, it's the same types of costs you're incurring, but you're electing to charge it different ways to different contracts. You cannot do that when you have government contracts. So on the indirect costs, by contrast, and I talked a little bit about this at the beginning, means that any cost not directly identified with a single final cost objective or contract, but two or more. And I've already mentioned that. Or you can have an intermediate cost objective. So, like an intermediate cost objective would be like some sort of service support center that, like I mentioned, computer services support, or maybe you have a copying center that collects those costs, and then you have some basis to allocate those costs down below to other final cost objectives, be it direct to a contract, or be it in an indirect cost pool. And I'll show you that I'll show an example of that in a second. But some examples of indirect costs would be insurance, facilities, legal, accounting, etc. And I do want to show you one other thing. Let's see. Okay. So let me stop share. Just so you guys, I'm a big person that believes in pictures. Okay, so hopefully you can see my screen again. this is an example. I went through some of these yesterday, but this is a really good just sample so you have a picture in your mind on indirect costs. So, the regulations call out, when you do have expenses that can't be identified directly with a contract, right, that everything else then is basically going to be indirect. And we'll talk a little bit about overhead versus, other types of indirect costs. But here's just an example, right? And this is not any sort of hard, fast rule, et cetera. Obviously, this comes from a much larger, company, corporation. But here would be an example of like a general and administrative rate, or G&A rate, as we call it, okay? So here would be like expenses in your expense pool, how you would have to collect those costs, right? Because they're not directly attributable. It may be executives in the company or high level people that are performing work for the general overall operation of the business. So you can see, like in this pool, it would be the salaries and wages of those officers or people overseeing it, right? The salary wages of people overseeing things, interest, payroll, vacation, holiday, sick leave. Legal is a bit like everybody. Your business, everybody. Benefits from legal services, the company, whether you have contracts with the government or commercial contracts, etc. Rent, some of these things would be in the pool you would collect because they're benefiting your whole business, all contracts or other things that your business supports. And then you have a small section there in the middle. Okay, now we have to remember, take out all the unallowables, and we have to track that. And I'll talk a little bit about unallowables as well. But in this regard, on the slide, you can see the unallowables as interest, right? Certain contributions that are disallowed by FAR, advertising, et cetera, right? So you have to take out all the unallowables that maybe in other regards would be legitimate business expenses, but you can't charge it to your government contracts. And then you're going to have an allocation base, and we'll talk about this in a second as well. But this is just giving you a picture. So in this regard, they chose a base, and this is everything that they selected to be in their base, right? You have to have a base, and we'll talk about this in a minute, that equitably allocates all those expenses in the pools, right? So basically, you'll have this one is direct labor, overhead, ODC. So it basically looks like all the direct costs are in there, and that's their allocation base, okay? So that just gives you a quick snapshot or picture of kind of what an indirect rate looks like, okay, pool and base and stuff. So when I'm talking to this a little bit, you'll see it. So let me go back to the slides. Okay. So let's see. Okay, this happened 1 second yesterday. My slide screen froze. Okay, let me stop and try it again. Okay, hopefully. I cannot advance my slides. Can folks see my Zoom?
I can see that you're on the indirect cost slide.
Yes, that's what we can see.
Yeah, I don't know what's going on now, because it did this one time yesterday, but then within a couple of seconds it started advancing.
If it would be helpful, you can share the presentation with me, and I can be the backup for advancing the slides, and you can comment.
Yeah, I can. It would take me a few minutes to probably get them to you. Let me try to do this one more time. Stop sharing.
Close. Yeah. That may help.
Let me go to. Okay, here we go. I don't know why. It looks like I had two different things open. Okay, so where was I here? Page 12. Okay. Okay, so sorry about that. It looks like it's advancing now. So okay. Okay, so we talked about that. And then a little bit on the indirect costs, number of indirect cost accounts. Like I showed you that live example. A single company can range from, oh my gosh, large companies, hundreds and hundreds of accounts in their pools, right? In their expense pools, et cetera. Obviously, a small business is going to be a lot less maybe expenses to deal with, a lot costs. You may not have a complex, indirect system as far as having a bunch of different overhead accounts, a bunch of different G&A, and we'll talk about the contrast a little bit between overhead and G&A. But all the overhead your company has, it may be pretty, pretty small, especially compared to large. So you may not have 6 or 8 overheads, or even a lot more, as some major companies, corporations have. Obviously, it would be limited and tailored to your specific company and business. So overhead pools. Okay, here's some examples contrasting kind of overhead from G&A. Basically, you would have, you could have a material overhead, manufacturing overhead, engineering, maybe just a site overhead. So these expenses, these are made up of expenses in the pool I talked about, right? Basically, you have a numerator and a denominator, or a pool and a base, right? So expenses in the numerator, they're made up of expenses who are causal beneficial relationship to the final cost objectives that can be directly measured by a base other than some sort of cost input base. We'll talk about in a minute, that by G&A. So just an example, and like I said, sometimes companies, if they're large, they'll set up these things by different, they'll have different departments, right? They'll have a manufacturing department or an engineering department, et cetera, right? So engineering overhead, for an example, would be allocated using a base that represents only to final cost objectives that use engineering services, right? And site overhead would be the same way. So if you think about it, okay, you would have contracts that have different requirements and maybe utilize different things that your company provides. So you may have contracts that have the need for engineering services, but you may have others that wouldn't, right? But you may have multiple contracts that have the need for engineering services. So therefore, you would have an engineering overhead rate that you would apply to those specific contracts, okay, because you have multiple ones and you have people that are supervising those engineers and other costs associated with engineering only in the pool, and you need to allocate that to your contracts that require engineering services. This would be the reason you would set up your company in a way to say, okay, now I have different overheads, because it can track that cost, because contracts that don't require any engineering services, they should not be sharing in that overhead rate, right? They shouldn't be charged for those services because they're not benefiting from it in any way. So, it's important to kind of have a system set up to where you have these logical cost groupings, which the FAR requires when you have costs that benefit 2 or more final cost objectives, but you need to still make sure that it's benefiting the contract, right, or the final cost objective where the costs are going. Okay, so in contrast, now you have a G&A rate. Okay, so that's our general administrative rate, and that's basically for expenses, and maybe some small companies, that's all they have is a G&A rate, right? But this is kind of for the whole company, right? So everything is everything that people are doing, performing in the pool, or the numerator of this rate, it's benefiting the overall company. There's no direct relationship with any final cost objective. Like I mentioned before, on engineering overhead, you have a direct relationship with your engineering contracts that require those services. G&A is kind of benefiting everything, okay? So, that's kind of the contrast on G&A, and I showed you some things that would be in the G&A pool, like legal, et cetera. So talking about the allocation base, indirect costs should be allocated based I talked about what an intermediate cost objective is, a final cost objectives, but it has to be distribute things equitably and have a causal beneficial relationship that I've been talking about. So you can have different bases, okay, depending upon, does it allocate those costs in the pool directly? So like I mentioned, engineering, to stay with that theme, if you have engineering overhead to support engineering labor that's required on certain contracts, okay, a good base may be direct engineering labor dollars, right? So everywhere those dollars show up on the contract. So when you charge your direct dollars to contract A and contract B that require that direct engineering support, it's gonna, your overhead that you're gonna get recouped, a rate is just a way to recoup all your overhead costs. It's gonna show up wherever those direct dollars show up, right? So it would be, equitable to follow. That would be a good allocation base, right? Because it's supporting that engineering labor that you have in the base. So, that's kind of an example of, choosing a good allocation base. And so if you go to the next slide real quick, these are some typical ones, I would say, for overhead. Like I mentioned, direct labor dollars. You could use hours, direct material dollars, right? Good. For G&A, you could use a base. Again, it's a total cost input. What's called value added single cost element of FAR. The Apex accelerators are probably familiar with MTDC base. That's specific to the grant world and those operations and how they have to follow different regulations. If you have people out there that are awarded grants and cooperative agreements and things of this nature, this is specifically defined by the FAR, and these are applicable to actually FAR-based contracts. So these are allowable type bases, but it's really just wanting an equitable dollar. So if you think about it here, like bullet point number 2 there on value add, let's say you have one contract, okay, that has all kinds of, requires a bunch of subcontractors and a bunch of direct materials on it, but all your other work, all your other contracts don't have that. But that's, maybe that one contract is a large part of your business, right? Well, if you use a total cost input base, okay, it may set up things, you may want to use a value added base, because if you didn't, it would allocate all your G&A costs predominantly that everything else is benefiting from to that one contract that has all these subcontracts and direct materials on it, right? Because that's pulling those costs over to that contract. So, you have to kind of be careful to how you set up, pools and base and what cost goes where equity, because this is definitely one thing that DCAA will look at. Will people, especially some companies can have really complex structures, but are costs going to where? So in other words, is one contract not subsidizing all the other work, or make sure you don't have one commercial contract, okay, that's subsidizing all your government work, right? So or vice versa, right? You have one, I really meant to put that in reverse. You have one government contract that's absorbing all these costs, right? Because you don't have an equitable allocation base, and all your commercial work is being subsidized and the government's paying for a lot of those indirect expenses. That's one thing DCAA really looks at. So allowability, I talked about this real quick. The FAR defines allowability: reasonableness, allocable, terms of the contract, cost accounting standards, and then any limitations set forth in FAR Part 31, which are the cost principles. These are what make things allowable versus unallowable, and there can be expressly unallowable, and I'll mention that briefly in a minute. Reasonableness: FAR considers the cost to be reasonable if what a prudent business person basically would do. The burden of proof is the contractor is responsible to establish that a cost is reasonable. Basically, if a cost is allocable, that's the contractor's responsibility to provide that proof. If the government says a cost is unallowable, the burden of proof is on the government. Okay, so there's a little bit of contrast. As far as allocability, we've already talked about that a lot on what makes the cost allocable. Is incurred specifically for that contract? Does it benefit the contract and other works, but can be distributed to them reasonably? Is it necessary to overall? But I provided an example earlier of allocability. Contract terms, again, this is going through all the 5 criteria we just mentioned that makes the cost allowable. Does the contract specify that this cost, is required, is needed for that particular contract? But contract terms can actually be more, the regulations have to be followed, but contract terms could actually be more restrictive to say certain costs aren't allowed, even though in other instances they wouldn't violate the FAR principles. Accounting for contract costs. The accounting system must be able to accumulate and report costs for each final objective, which we talked about, right? So direct costs of the contract, of the contract that are charged correctly, and then allocation of any sort of applicable indirect costs, and then you have to take out the unallowables, as I showed you in that example. So again, costs might be normally legitimate business expenses, but they otherwise wouldn't be allowable. So we talked about those standards. Now, sometimes you can have again, it's always, and I'll make this brief point, contractors always get a little bit upset where you have costs, DCA questions, direct costs, right? Because now you have associated overheads and burdens with that. And by default, those costs are questioned too, right? Because if the direct cost wasn't allowed so really if direct costs get questioned, it's more of an issue for the contractor because it makes more costs as unallowable. That's what they're called, unrecovered costs, okay? But you have to make sure. That's why it's good to set up accounting system of unallowable. So I think we're running a little bit short on time here. So, but I've talked to many of these things already. So accounting for contract costs, these are just going through everything I listed that I went over earlier in the checklist, all the DFARS requirements, how you have to set up your accounting system, labor system, timekeeping system that we talked about, how a timekeeping system gets set up, et cetera. I can talk to timekeeping a little bit more in depth at a future date, but it has to track certain things, and DCAA can do floor checks where they interview employees and stuff, make sure they're filling out their time card daily, make sure the employee is the one that's kind of, the controlling, because the employees are the ones that get paid, right? So they need to be really involved with, knowing what they're charging to, et cetera. And that's kind of the check and balance in that system. But here's a little bit more about timekeeping system, fill out timekeeping, as I mentioned, on a daily basis, cost distribution reports to reconcile the payroll registers, et cetera. I've already talked a lot about unallowable costs, anything of FAR Part 31. You can get into expressly unallowable costs, which basically are, hey, something's expressly unallowable if it's spelled out in the FAR, right? Which means you could get penalties on top of the cost being unallowable, like alcohol. You can't charge alcohol because it's specifically identified in FAR Part 31 that says you can't charge alcohol. So if you do it, you may not only lose that cost, right, but you also get a penalty applied because it's specifically spelled out, as opposed to other things that, aren't specifically spelled out, but they would be, just unallowable costs, right? Not specifically alcohol or something of that nature, but maybe they don't follow the terms of the contract, right? Or they're not allocable, et cetera. We talked a lot about CLINs yesterday. Contract, that your accounting system needs to be able to identify different things on the CLINs that you receive in Section B of the contract. It may have all kinds of different CLINs. Billings, again, this is one of the things of a acceptable accounting system. They need to be reconciled to your cost accounts, et cetera. Everything needs to go back to the general ledger that produces financial statements of a company. You should only bill that complies with this section of the FAR when you have been paid by cash or check, actual payment for items, et cetera, based on current contract positions. And you have to reconcile all the billings to your books so the government can look at that, but that's what it has to be capable of doing. DFARS requires cost accounting information, and I've talked a little bit about this before. It's like the monitoring. Here's the last two: adequate, reliable data for follow-on acquisitions. I talked about cost estimating, CAS where applicable. Does your business, do you have a manager or someone or the owner or whoever that reviews all this stuff, right? Kind of you conduct your own internal audits. That's important to make sure. Here's common deficiencies real quick. You can have improper timekeeping that we find a lot. Like I said, employees don't know how to charge their time correctly, or that, the costs you're getting there. Failure to exclude unallowable costs. Again, I talked a lot about segregating direct from indirect costs. Here's, these are common deficiencies, inadequate procedures that ensure the subcontractor and contractor are included in billings, right? If the payment is made to the subcontractor and vendor will be made, right, in accordance with those terms, 30 days, what are those policies? So I talked a little bit, just to kind of wrap up here, frequently asked questions. There is no such thing as a DCAA approved government accounting system. Again, there's tons out there that you can choose from. We'll do an audit, and it just has to make sure it can adhere to everything. If you want a government contract or you have one, that it's adherence to all the regulations and things that are required. Again, as I mentioned before, you can't request an audit from us. That's only done by the buying offices and the contracting officers that request audits directly to us. I talked a lot at the beginning about what different systems. So anyway, I tried to I tried to wrap up everything quickly. I meant to leave a little bit of time for questions here at the end, but we didn't get a lot of questions yesterday. But it was kind of a lot of material to cover. And so with that said, hopefully folks took something away from this, but are there any questions or comments, etc.?
Just Adam, I wanted to let you know, we did allocate 2 hours. So, hour and a half planning for presentations. So if no one has questions, maybe what might be helpful, if you know of questions that are commonly asked that some of us on this webinar have not thought of.
Okay, let me.
That would be of value for people to think about. That was a lot of great information, Adam. I know it's a thick curriculum, but it becomes very important. Government contracting in general is quite granular, and that is the precedent we try to impress upon our clients.
So okay, so hang on, let me see here if I can find myself.
I know some of you have joined late while Adam is looking. So we have completed our presentation. We are in a Q&A portion. And but I wanted to let you know that we will be also forwarding to you the recording of this presentation. Deborah, you have a question? Feel free to turn your mic on. How are you?
Thank you. So yeah, just because that was a lot of information to digest over the last 2 days.
Yeah.
The recordings, are they available for us to just go back and walk through it
Yes.
step by steps to kind of learn the process of what's acceptable and what we should have in our accounting system?
Yeah, absolutely, Deborah. I will forward in addition to our recording, we will forward a link to our YouTube channel. You can go and revisit, this presentation.
Likewise with those forms he showed yesterday, he showed a lot of forms and a lot of like, I think it was Lockheed Haven or something like that, their bid processes or
Correct.
proposal. Is that something available for us to review?
Adam, can we make that available or some form of those?
Yes, so let me actually, if we have a little more time, I apologize
We have
because
more time.
I thought
No,
it
that's
was
okay. Yeah, we
I-
allotted hour, but we always leave room for Q&A because it's very beneficial. So we
Okay,
will,
let me
Zoom
show-
will not cut us off, so to speak. Adam. And anyone
absolutely
that-
no.
And anyone that needs to, leave, that's okay. We understand.
Yes, let me.
But we do want to benefit those that, oh, thank you, Beth. Beth posted a link to our YouTube channel.
Bringing this up. Give me just one quick second here. Okay, so let me share my screen again. Got too many things open here. Okay, so yeah, so no, that's a good question, and yeah, I'm happy to answer questions, or if I can go over some frequently asked questions. I would have taken a little bit more time. I know it's a lot of material.
Yeah.
I thought this was an hour and a half, but it's no problem. I'm happy to stay on board and talk. But as far as the material and resources, so as I showed you before, here's our DCAA homepage. Okay. So if you just go to www.dca.mil, you can have access to all this. So some of the forms, maybe not everything I showed you yesterday, like especially like kind of the live example, if you will, that's not on here, right? But you can find a lot of the forms I've talked about, just like in checklists and tools. You can find the proposal adequacy checklist. I talked about that yesterday, and that's also in DFARS, right? We have this actually provides a link to it. Like if I click on it, here you can just go to the DFARS checklist, right? So that's something I went over. So today you can, again, ICE model, but here's the pre-award accounting system checklist, right? So I went on that. You can go right here and click on that, and there's a pre-award accounting system checklist. And a lot of this stuff, to be honest with you, you can find it just by like Googling, right? But that's the checklist. Here's other things for incurred costs. Now, if we're talking more, and one thing I was going to go over today, but again, I thought I was running short on time, but I'll just show you now that everybody's here. I believe it's, I hope it's here. Guidance. Or maybe this is exactly what I wanted to show you. So this is a great, so you can see, if you can see my screen again, this is 99 pages, okay? But this is great information for contractors. And I touched on this today. This is called DCAA pamphlet 764190. You can probably find it just by Googling, right? But it's posted on our website as well. And we created this for customers. We know a lot of the information is overwhelming, right? But this is really good information. It talks about how we're set up. It talks about all the pre-award surveys that I talked about today, accounting system, labor charging system, stuff I talked about yesterday about price proposals and proposal adequacy, okay? Cash standards, if you're subject to cost accounting standards, okay? Public vouchers, billings, all these type things, okay? So one thing I did want to point out in this, okay, let me see if I can find it really quickly. I think it's on page 14. So right here, okay, so this is on page 14, I was right. Okay, the labor charging system, okay, and I was gonna get into that a little bit deeper today, but I'll make a few comments about that. What are some things DC, so when you have a good accounting system that's been set up, again, to follow and adhere to rules and things, again, if you've won government contracts or you have government contracts, or maybe you're moving from fixed price contracts that maybe didn't have progress payments to progress payments, or you're trying to get your first class type contract. Again, how to set up a good accounting system. So here's a good thing on timekeeping procedures, and it says kind of what we look for, procedures and controls, but I just want to highlight a couple of things. You know, good, like a segregation of responsibilities, right? On, that's what I mean, you know, employees controlling, you know, kind of exactly, you know, what they're charging to as they're working and controlling their timesheet. But then you have an overview, right, of supervisors, et cetera. But this is really good, but it talks about timesheet preparation right here, right? So these are things DCAA would look at if they came out to do a floor check, right? That an employee is recording his or her time daily, right? That they're keeping up, because, you know, hey, if you wait 2 weeks, you may not be charging things accuracy, etc. You know, that they are recording their time on the timesheet. In other words, it's not being filled out by a supervisor on their behalf, unless there's, you know, a lot of time, some extenuating circumstances. But for the most part, an employee should be filling out his or her own timesheet, right? The distribution by project numbers. We talked a lot about that today on, hey, if you're charging a specific contract or a project number, that your system can identify that project to it, right? Changes to the timesheet, procedures. You need to have procedures in place that identify the original time charge. Okay, but now it was canceled out, it was marked out or adjusted. You know, there needs to be something in place to show that audit trail, right, of why it was changed or what. You know, there's no manipulation going on to, hey, oh, we're going to change this charge because it benefits us, or we're going to charge this fixed price contract versus that cost type contract, or commercial work versus government work, et cetera, right? So all these things are things DCAA would look for. Recording of all hours. Sometimes that confuses people, but you know, we like to have all hours reflected, whether they've been worked or not worked, because it makes a big difference, right? And so that's, if you get into, you know, a salaried employee that's working, you know, a bunch of hours that, you know, they're not getting paid for, they're limited by 40, we like to see a reflection of all those hours, which it helps us to write our contracts better and know what we're going to need. But that's called uncompensated overtime. And we could, you know, talk about that in a whole separate thing and kind of what some of that entails. But this is good guidance on what we're looking for, right? And here's a recommended timekeeping policy. Supervisors should approve and co-sign all timesheets. As I mentioned, they're prohibited from completing an employee's timesheet unless the employee's absence for, you know, like I said, extenuating circumstances, the nature and the work. So this is really good. This talks about our floor checks or interviews that we'll do periodically, you know, from time to time, to say, hey, are employees actually at work? Are they performing in their assigned job classification? Is employee time charged direct to the appropriate job or indirect account? You know, a lot of things I mentioned you know, through the slides earlier. And so, you know, but this is a great book that talks about many things and, penalties of mischarging labor, subject to the US code, et cetera, false information and all that type of thing. It goes in, this pamphlet goes into a lot of things I talked about, the pre-award survey. It even gives you a picture right in here. You don't have to actually find the document of what the checklist looks like and what DCAA looks for. Again, price proposals, a lot of things that I talked about yesterday that the person was asking, where is a lot of this information? If you get a hold of this DCAA pamphlet, I mean, this is really good because it tells you it tells you a lot of information. Matter of fact, at the end, how to fill out some of this stuff, but it'll go into more direct versus indirect costs. Okay. And I think it gives you, so I don't know if people have seen this before. I was going to show this today, but again, just time. But basically, there's a good color version online that actually has this. But how can you tell if your company is subject to the cost accounting standards, right? This is a good format that lines out, and you can see here. It may be hard to see my screen, but basically, for small businesses, right? The box at the bottom of the screen, these are exceptions over here. So does the contract meet one of the CAS exceptions, right? You look at this box to the right, contracts, subcontracts with a small business. So most small businesses, they're not subject to CAS. Okay, so they don't, some of the CAS standards are enforced by FAR Part 31, but for, the actual CAS standards, or if you're modified or full CAS coverage, et cetera, you're exempt from that. So these are exemptions that, hey, a contracting officer should not be putting those clauses into my contract because I'm a small business. Well, how are you determined a small business? Well, that gets back to the NAVES code and all, that's beyond this presentation, right? But am I a small business and according with this NAVES code and the way they set up their solicitation and award, et cetera? But if you are, these clauses shouldn't go into your contract that make you subject to these cost accounting standards. But it talks about if you get more than 7.5 million award, right? Or is a business performing CAS covered contract or something valued at 7.5 million, okay, yes, then it is CAS covered. Then it talks about, okay, if you get 50 million or more in 1 year, now you may be subject to the full CAS standards because there's 19 of them. So sometimes you may be subject to only 4 of the 19, but if you have a bunch of work with the government, like 50 million more, other things kick in that make you subject to all the CAS standards, right? Which actually is a little bit more regulation, if you will. So anyway, this is a great pamphlet and tool, and it talks about that. And I was going to show you, I think at the end, talks about billing, provisional billing rates, interim vouchers, stuff of that nature, what we look for on different billings when we do our voucher reviews. So this really gets into that. I think we may have a separate presentation, but here's a picture of a voucher, right? So it goes into some detail there, guidance and stuff of that nature. And let's see, there was something else. Let's see, that's more.
What is it that I'm looking, I'm following your link. So where exactly did you find it? Because we can send this link along with the presentation, or if you can just copy and paste it to me and send it out to everybody, it'd be great as well.
Absolutely. Let's see, that's more about. Okay, yeah, request for progress payments. So I thought there was one other thing I was going to point out in here. Okay, so yeah, this is actually goes along with the ICE model. Say your company has to prepare an incurred cost proposal because you got a cost type contract and now you have the FAR 52 allowable cost and payment clause in your contract. Okay, so here's great information on how to prepare that incurred cost proposal, right? Kind of what to look for as far as what audit's going to look for, what you have to do, etc. All the costs, the contracts you have to kind of lay out in there. And I believe it has some pictures at the end here. So like for instance, this is an example that the model has. Like I think we have the Excel model. I'll show you where those are again in a second in this pamphlet. But here's the different schedules in an incurred cost proposal, right? You have Schedule A, Schedule B that would go into all your G&A. C if you have overhead expenses, right? To list all those out in the pools and bases, etc. So allocation bases would be Schedule E. So there's a lot of detail that can go into this. I mean, if you're a small company, obviously a lot less detail. You can imagine some majors, oh my gosh, their proposals are extra large, if you will. But subcontracts, right? Schedule H, right? Subcontract information. You have to show a reconciliation of payroll, right? So your total labor cost distributions, et cetera. You have to sign off on this, final rates, et cetera. So, and then here's a lot of supplemental information that, the auditors would ask for if they do it. But yeah, this does have pictures. That's what I thought of the model linker cost proposal, right? And pools basis and what it ties to, right? So the pool would be in Schedule B of your anchor cost proposal. The base would be in Schedule E. Talk about how you got to the base and all that. Then you would have your rates at the cover page, etc. These would be just a snapshot of kind of how, again, there's your GL account on the left. Here's your account description. Here's the different expenses that are associated with it, and reading the notes and all that. So yeah, we may have a presentation on an anchor cost proposal, but so I'm not going to get into the details. But anyway, this is a great pamphlet. So let me show you. If you go back to our portal, okay. So let me just go back to home. So this is where you would start, right? So again, where you can find this pamphlet and other documents is under customers, okay? So the drop down under customers, and then you go down, there's two places, guidance and checklist and tools, okay? So for guidance, if you wanna find the pamphlet that I was just showing, you go to the very first thing. It's called information for contractors, okay? So if you go to customers, guidance, information for contractors, and you click on that, then you go down here, it'll bring up this screen to this bullet point right here, and you should be able to just click on it. And if you click on it, it'll bring up that pamphlet I was just going over.
I sent to everybody the link to that page so they can view it themselves.
Okay. So any other questions, or I can try to go, if there's no other questions, I'll try to talk to some frequently asked questions.
I don't see any.
I do have a question.
Yes, Amelia.
Hi, just to reiterate a little bit on what Deborah said, is it possible for us to receive that Lockhart document that you shared yesterday? Because it definitely went into detail of everything that's needed to submit the proposal, and it will help us it will help us as we're creating the proposal line by line. So
sure. I mean, I'll provide a link. I don't want to give you that information directly because it's not DCAA and it's not DCAA approved. I provided that example because it used to, as I was being introduced, I used to be what's called a DACO, a Divisional Administrative Contracting Officer at a big Lockheed Martin segment, missile and fire segment and stuff. So Lockheed Martin had some good, especially that segment, some good packages that they put together. Now, obviously, they're a large corporation, so it was kind of crazy, but they do post stuff. So I'll tell you two things. One, you can find it by Googling. If you just Google Lockheed Martin proposal preparation, you'll be able to find it. And also you can go to the Lockheed Martin website and they'll have things on there, examples of what they tell their personnel, their estimating personnel and stuff on how to prepare a proposal. So, you can do a simple Google search and find it. It's nothing hard to find. But I'm happy to provide a link to the host here, to say, here's how you find it in a Google search, but I don't really want to officially, because, I don't want it to look like DCAA is saying this is how to do it, or this is, especially since it's Lockheed Martin and that's a contractor that we actually audit. But it is good information. And I'll probably, I came into this capacity and someone else had this prior to me. I'm probably going to over time rework the slides because I really think it helps to provide visuals to everyone when you're doing these presentations. I'm a very visual person and I can sit there. That's why I do a lot of screen sharing. I can sit there and listen to someone and they can be talking and I just have no idea what they're saying, what it means. But when I see a picture, right, it's like, when I first started working for DCAA, I was the type of person that, what does this mean? Okay, pool, base, how do I look at this, right? When I was just a simple auditor trainee, And basically I started having to draw things out by paper, right? And say, okay, this is what it looks like. This is a bit, and make those pictures. So when I can find good examples to provide to folks when I'm giving presentations, I really like to show that, because a picture, as they say, is truly worth 1,000 words. So, but I'm more than happy to tell the host where that information, or you can Google and find it, but it's very easy to find. But it is good. It does provide great visuals. They did a good job in just providing some basic visuals on how to follow the DFARS checklist, right? And how to fill out some of the sections, and so you're doing an adequate proposal.
Right,
Yeah,
I
think
agree.
it
I
is fine.
appreciate that. Because yeah, when you went through the presentation yesterday and you pulled up that document, it was itemized and it went into detail, and it also had links to other forms and other illustrations, and it was just easier to follow, especially for someone just starting out. So
Mhm.
Absolutely.
And
And
hi,
let me
Natasha.
see. I think
Hi,
I
Hassan.
still have it. Yeah, so I'll show it again. So let me see if I can maximize my screen. So this is what you're referring to. And basically, if you go up to the top, okay, it says cost or pricing, data proposals, proposal compliance, and they did it. The group at Lockheed Martin that put this together, material acquisition strategy and adequacy, and they're referring to it as MASA. So if you just Google that information right there, okay, so if you take a screenshot of what I'm showing you right now, if you just Google like MASA, cost or pricing data proposals, Lockheed Martin, you'll find this, right? This is not any sort of proprietary or special information. This is advertised on their public website. But to your point, it talks about the cost and pricing threshold. I went through yesterday when they require certified cost of pricing data, but it has, this is a great example of how to fill out the DFARS checklist, right? Of what you're looking for, how it breaks it down. So it's really good information. Like I said, I'm going to change my slides in the future, but it talks about the various forms to fill out, how to index your proposal, right? This is a requirement on, here's the description. Okay, what am I using? Proposal in far right. How to index that. So like I said, here's a cost breakdown example. This is what you're talking about, that, hey, there's great pictures, there's great example on materials, etc. Now, there's also a detailed Excel sheet I showed you yesterday. You can find that by Googling as well. Or if you go, let me see if I can minimize the screen. Okay. So if you go here on their slide deck, some of their links are live that you can click and get to their forms. And here's the trick on this. So I'll show you where that Excel. So the Excel spreadsheet showed a great shot of a consolidated bill of materials and a bill of materials. So if you go to this page on their slide, let me see, I think it's in here somewhere.
You are visual. You even remember number of pages, Adam.
Yeah. So if you go, this is a great thing too. If you go here to their example, you see how the Excel file is embedded in here. So you can try to click on that, and you're not going to be able to open it if you just pull it up on Google, right? Because it's like, oh, how do I open that? Is the link broken or something like that? And there may actually be, like these you can actually click on, but there may be another one in here where they provide an Excel. I think that might be the only one, but it's a great, it's a great thing to just give you a visual, right? I mean, you're responsible for your own company. You can't say,
Right.
oh, Lockheed Martin said, right? But it's a great visual. But the trick in how to open that Excel file is you have to have Adobe Acrobat, or Acrobat, I think is the way it's pronounced, on your computer. And if you have Adobe Acrobat software on your computer, you can open this document within Adobe, and then you can open that Excel spreadsheet. So like I said, I can't even open it on my personal computer that I have to connect to do these presentations via Zoom. But I can open it through my government computer by Googling, because we do have Adobe Acrobat on all our government computers. But that's kind of the trick on getting to that good Excel example of kind of some things and stuff. Now, bear in mind that, and this, like I said, this is a great thing on how to document travel. Here's ODC right here, number of attendees, airfare, what we would be looking for if we did an audit. Trust me, Lockheed Martin's been through 1,000 audits, right? So they try to get ahead of the game and prepare, etc. But like I said,
I feel like we are in a pseudo mentor protege program.
Yeah, this document is very, very easy to find. So, yeah.
Well, we do have a few minutes left. I just wanted to be mindful for any last minute question. If anyone has. If not, great to see. I love to see my clients, here active, asking questions, Deborah and Amelia and everybody else. If you are not our client or haven't been assigned a counselor yet, please do reach out. So we will help you through this granular stuff. We will also help you explain big picture and how these little pieces fit into your proposal puzzle, right? That's what we are here for. So feel free to reach out. Beth Ann is our assistant program manager, and she will assign you a counselor. If you're outside of our region, we will find you the appropriate PTAC, as we mentioned. I really want to thank Adam for joining us today and explaining all of this in great details. You've been a great resource. And thank you everybody for joining. As mentioned, we will follow up. I'll follow up with that DCAA link that I have provided for you in the email, as well as the recording of this, so you can revisit this information whenever needed. I know it was a lot. So nice to see you all. Appreciate your time and being here, and sign up for all of our next webinars. This is a procurement month. If you have not known, it's a government procurement month, is the month of March. So we have about 5-6 sessions scheduled this month. The next week is Ask Us Anything, right? So do come prepared. Look on our website. Feel free to sign up on our link if you have missed it in our newsletter. But we have a couple more events. And also we have another GSA schedule coming up, and guests from GSA themselves to explain the GSA process. So we hope to see you there. Thank you all very much, and have a great rest of your day.
Thanks, everyone.
Goodbye, everybody.